Welcome back to the Market Podcast. Asymmetric info for individual investors. Educational info only, not financial or legal advice. Consult a pro before investing. Imagine a future where nuclear power isn't just some far-off dream, but it's compact, it's deployable, and it's ready to tackle global energy needs. Now, picture a single company holding crucial insights, maybe even the keys to unlocking this revolution, possibly by looking back at lessons from its own past. So here's the big question we're exploring for you today. Will this company basically dust off its old playbook, surge ahead to lead the small modular reactor boom, and really capitalize on these huge regulatory shifts we're seeing? Today, we'll get into whether this company is your ticket to ride that nuclear wave, or if maybe there's a cautionary tale hidden in its journey through this exploding market.
It's a fascinating question because the stakes are just incredibly high. We're talking energy independence, national security, and of course where you, the investor, can find real innovation and lasting value. This company has been a central player for a very long time. The moves they make right now, they could absolutely shape energy infrastructure globally for a generation.
And when we talk strategy, leadership is right at the center. Rex Geveden has been president and CEO since 2017. His background is just perfectly suited for this kind of high-stakes industry. Deep aerospace, deep nuclear engineering expertise. He even spent significant time at NASA, overseeing massive projects like the Space Shuttle's return to flight. That kind of experience managing incredibly complex, high-risk tech where failure just isn't an option. That's exactly what you need in advanced nuclear development.
Exactly. And what's really telling about Geveden's leadership is how he's genuinely steered the ship, pivoting towards these advanced nuclear technologies. Take the BANR concept, the BWXT advanced nuclear reactor. It's not just some random new design. It specifically builds on the lessons, the really valuable insights they gained from the earlier mPower program. Now, mPower, that was ultimately stalled years back. Market timing wasn't right, cost concerns. But BANR is an evolution. It's designed to be more viable, more scalable, specifically for today's massive demand for carbon-free energy. That shows a leadership team that learns, it extracts value from past efforts instead of just walking away. That continuity is powerful.
And it's not just vision, right? It's backing it up financially, giving innovation room to breathe. Under Geveden, they've locked in these huge, stable contracts, like that recent $2.6 billion deal for naval nuclear components. Now, that's not just a flashy number. For you, the investor, this is critical. It means consistent cash flow, funding those ambitious, capital-heavy advanced reactor projects like SMRs. It de-risks them significantly compared to, say, venture-backed startups flying by the seat of their pants. It provides this incredibly solid financial foundation.
It's a unique advantage, really. While it's not founder-led in the classic sense, Geveden is often called a nuclear genius. He manages these high-stakes projects like a visionary founder would, blending long-term vision with meticulous execution. That suggests real potential for outperformance. And it's worth noting how executive pay lines up. Geveden's $8.24 million annual earnings, heavily tied to performance, revenue growth, EBITDA. Something like 87.7% of his incentives are linked directly to stock performance and hitting strategic goals. The structure basically pushes decisions that prioritize shareholder value, like aggressively going after leadership in advanced reactors. It's smart alignment.
And it's not just Geveden. They've strategically built up their expertise with key supporting figures. A deep bench, really. Just recently, June 2025, they made some significant leadership changes precisely to strengthen their nuclear capabilities for future growth in this market.
Yeah, and the caliber of people they brought in or promoted is really something. Their experience maps directly onto the SMR ambitions. Take Kevin McCoy, the new chief nuclear officer, a retired U.S. Navy vice admiral, over 30 years in naval nuclear propulsion. His hands-on reactor operations experience, his deep understanding of safety protocols, invaluable. It brings a practical, deployable mindset. And he oversaw Project Pele, that mobile microreactor program for the military. That background could absolutely help advance their deployable tech, taking lessons learned in defense straight to the commercial side.
Right, applying that military rigor. And the changes continue. Joe Miller took over from McCoy as president of government operations. His engineering background has been key in making their nuclear manufacturing more efficient. And that directly helps lower costs, which is absolutely essential to make advanced reactors competitive.
Then there's Kate Kelly, now VP of Naval Reactors Operations. Her strength is program management, getting things done efficiently, crucial for streamlining the complex testing and certification for advanced reactors, a huge bottleneck for many players. And don't forget Mike Fitzgerald, the interim CFO since May 2025. His internal financial know-how ensures discipline, especially with big investments in new tech. These aren't just names on an org chart, they're strategic placements.
Exactly. And these moves, like speeding up advanced fuel production with that new furnace in July 2025, they clearly signal a collective push. They're actively using past setbacks to inform smarter, regulator-friendly approaches now. It feels very intentional, very forward-looking.
And that connects directly to the company's identity, its history. It traces back to the 1850s, part of Babcock and Wilcox, a big boiler maker. Then spun off in 2015 to focus purely on nuclear. It's not founder-led or family-owned. It's public, mostly institutional shareholders. That means accountability.
And their mission, very clear. Deliver innovative nuclear solutions to create a better world. It's not just fluff. It translates into a vision of powering the clean energy transition with advanced reactors, hitting that SMR market head-on. Leadership talks about leading in deployable nuclear tech, evolving concepts from mPower into things like BAN and Project Pele. They're aiming for a 10-fold improvement in portability and efficiency. That's a game changer.
And the culture supports that ambition. People strong, innovation driven. It emphasizes teamwork, safety, ethics, all critical in nuclear. They empower employees, train them, focus on diversity. It fosters a unified approach to hitting goals like getting advanced reactor certified. You saw how effective that culture is with those smooth leadership transitions in 2025. Continuity is key for these long-term projects.
Okay, let's break down the core business itself because it sounds complex, but you can get a handle on it. Think of them as a super specialized engineering firm, designing, building, servicing nuclear parts, fuel, reactors. Main customer, the U.S. government for defense, but big growing ambitions in commercial power.
Yeah, a simple way to think about it for you, the investor. They build the hearts of nuclear subs and power plants. Safe, efficient energy. The complexity, well, that's in handling enriched uranium, the incredible precision needed for every component, and navigating those super strict regulations. It's like building nuclear Legos, but incredibly advanced modular units you assemble on site, not like the old giant plants that take decades. Every piece has to be perfect. Safety is absolutely paramount.
And what's crucial for you to grasp is that despite all that technical complexity, their finances are incredibly stable. Thanks to those predictable, long-term government contracts, these are multi-year, sometimes decade-long deals, a massive advantage. That stable base makes evolving or even reviving past programs much more viable now, especially with a friendlier regulatory climate. That consistent cash flow is a huge buffer, letting them invest heavily without the usual financial stress pure startups face.
Looking at their products, yeah, naval propulsion for the U.S. Navy dominates over 70% of revenue. That's not just income. It proves their unmatched expertise. That long relationship validates their product market fit in defense. It's a baseline of excellence few can match.
But the commercial side is where a lot of the excitement is now. Actively developing advanced SMRs and microreactors. We mentioned mPower, the 180 millimolar SMR design suspended back in 2017. Market timing, costs. It was a tough lesson, but it showed the promise of modular building. Build in a factory, ship it out. So today, it's not about restarting mPower directly, it's evolution. New designs like BANR, that modern pebble bed SMR known for safety, and Project Pele, the truck transportable microreactor for military bases, shows incredible deployability. They took the spirit of mPower and refined it for today's needs.
And their roadmap emphasizes advanced fuels too, especially TRISO, tree structural isotropic particles. These are tiny, super durable fuel beads. They lock in radioactive material, boosting safety and efficiency, makes nuclear even more robust. They just commissioned a new CDI furnace in July 2025, specifically for TRISO, part of the Advanced Reactor Demonstration Program. Shows commitment to the whole fuel cycle. They've also expanded medical isotope production, diversifies revenue a bit, but the core focus is clearly nuclear tech. This whole product strategy positions them perfectly to lead in SMRs, especially leveraging those streamlined NRC licensing processes for advanced designs. That's a major catalyst.
Okay, so with all that context, what really sets them apart? What's the unique edge in this specialized market?
Well, what truly makes them different is this unique blend. Decades of nuclear manufacturing mastery, combined with that powerful, almost exclusive profit engine from Navy contracts. And fuse that with a deep passion for innovation, stretching back 165 years. Their model thrives on vertical integration. They control almost everything: uranium processing, fuel making, reactor assembly. That cuts costs, reduces dependencies, strengthens the supply chain, ensures quality. It's like the chef owning the farm, the mill, and the restaurant. Total control.
And looking back at mPower through that lens is interesting. They paused the Bechtel partnership years ago. Market wasn't ready for SMRs, but now,
With the surge in interest, plus their unique ties to the Department of Defense, you see it with Project Pele, they get this invaluable real-world testing ground competitors just don't have. That positions them uniquely to lead the advanced reactor revolution. Why? Because proving deployable tech with the DoD means demonstrating reliability, safety, efficiency under the toughest conditions. If regulations keep accelerating deployment, that military validation becomes an unmatched edge in the commercial market.
Absolutely. Their whole history shows resilience, adaptability. Started with steam tech in the 1850s, pivoted successfully to nuclear in the 50s, making parts of the USS Nautilus, the first nuclear sub, then strategically spun off in 2015 to focus solely on nuclear. A key moment, as we said, was launching mPower in 2009 for SMRs, suspended in 2017 after investing over $500 million. Costly, yes, but it provided crucial hard-won lessons in cost control, market timing, navigating regulations, lessons they're applying now.
And they keep reinventing, adapting to the global clean energy shift. That huge $2.6 billion naval deal in 2025 came right as SMR interest was surging. It's a strategic anchor, their revenue. Consistently growing over 10% annually, $1.9 billion in 2020 to $2.5 billion in 2024. And market share in naval nuclear, nearly 100%. That track record strongly suggests they can pull off the advanced reactor push, especially if regulations stay favorable. History predicts performance here.
Operationally, their footprint is strategic. Lynchburg, Virginia is HQ, but also the hub for core manufacturing and R&D. Then key sites across North America, Euclid, Ohio for precision gear, Mount Vernon, Indiana for heavy parts, Peterborough, Canada for services, a distributed but integrated network.
And owning most facilities is key for security, with sensitive nuclear work, classified tech, some leasing for flexibility, but very little outsourcing in critical areas. Ensures tight control over quality, proprietary processes, vital for advanced reactors where IP is everything. They truly make it all.
That translates to incredible vertical integration, uranium deconversion, fuel fabrication, reactor assembly. They control it. It's a massive strength. Shields them from supply chain chaos, enables cost cuts, maybe 10–20% savings versus peers relying on suppliers. You see it in their TRISO fuel production. Unlike competitors needing partners, this integration boosts efficiency for SMRs, helps them evolve past programs under new rules, gives them control over costs and timelines.
Their main distribution is business to government, B2G, those long-term deals. But the B2B segment for commercial SMRs is growing fast. An innovative piece is their direct integration with clients, offering on-site services. Supports scalability. Look at the rapid prototyping for Project Pele. Engages customers early, proves designs in the real world, showcases advanced reactor viability for a wider audience.
And this operational approach leads to remarkable revenue predictability, around 76% from those multi-year Navy deals. About 80% of revenue is recurring. That's stability most companies dream of. Q1 2025 revenue up 13% to $682 million. That $2.6 billion contract in 2025. Clear visibility into future earnings, a huge buffer for investing in advanced reactors. This predictability is foundational, a unique edge in a sector often seen as risky.
Okay, let's dig into the bedrock, their competitive strengths, the enduring advantages. First off, that near monopoly in U.S. naval and nuclear propulsion, sole prime contractor for sub and carrier reactors, effectively 100% market share via exclusive long-term government deals. It's not just dominance, it's stewardship.
And that creates massive barriers to entry. Think stringent regulatory approvals, classified tech access requirements, decades of specialized know-how you can't just buy. It deters competitors, protects profitability via stable high-margin revenues. Those revenues then get reinvested to subsidize advanced reactor R&D, funding their future. This financial fortress lets them leverage past lessons and lead the SMR revolution, especially as NRC streamlining cuts certification times for advanced designs. They can leverage their position without immediate rivals.
They also gain huge benefits from economies of scale. Big manufacturing sites like the expanded Cambridge plant in Ontario, an 80 million Canadian dollar investment, over 200 jobs cut per unit costs significantly. Reactor vessels, fuel assemblies estimates are 15–20% cheaper than smaller peers due to high volume, spreading fixed costs.
Compare that to startups struggling with scaling complex manufacturing. This company's established supply chains and vertical integration amplify efficiencies. Fixed costs become real advantages in both naval and commercial work. This scale is particularly potent for SMRs, letting them produce modular parts affordably even now, positions them to lead if regulations like the IRA's production tax credits incentivize mass deployment. They can make evolved versions of past programs viable through shared infrastructure and efficient manufacturing, potentially pricing out newer players.
Now, traditional network effects like in software are less obvious here, but they emerge subtly in the SMR ecosystem.
Right, it's fascinating. Widespread adoption of their designs, say the Banner reactor, could exponentially increase value. Imagine standardized parts, shared maintenance protocols, collaborative fuel supply chains across utilities, data centers, whoever uses them. For instance, as more places use their TRISO fuel production ramped up with that new 2025 furnace interoperability grows, it creates a network of compatible systems, boosting reliability, simplifying operations, cutting costs. We're seeing hints with partnerships like Wyoming's microreactor evaluation. If regulatory shifts speed up advanced reactor approvals, these network effects could amplify dramatically, helping them set an industry standard. Echoes the modular vision of mPower, but with broader adoption creating a reinforcing cycle.
They also position themselves uniquely as a full-spectrum provider, integrating design, fuel, services in ways competitors like GE Hitachi maybe can't easily match, largely due to those exclusive Navy ties and proprietary manufacturing processes.
You see that differentiation clearly with Project Pele mobile microreactors for defense. Huge positive response secured DoD contracts highlighting reliability compared to rivals. For their SMR strategy, this counter-positioning really shines with regulatory changes like the NRC's Part 53 framework. That framework favors integrated players managing the whole life cycle. It streamlines deployment, potentially letting them outpace others and revisit concepts from prior programs with an even stronger, unreplicable edge for military validation.
Another powerful moat. Incredibly high switching costs for customers. For nuclear projects, we're talking maybe $50 million, $500 million. It's not just cancellation fees. It's requalifying suppliers, retraining staff, complex regulatory recertifications, massive supply chain disruptions, huge financial burden.
And in the Navy sector, the deep integration creates emotional and operational lock-in. Switching could risk mission timelines, national security, decades of shared knowledge. This barrier directly supports their commercial advanced reactor ambitions. A utility adopting their ban design faces huge costs to switch later, bolsters their leadership in the SMR revolution, especially with easier regulations potentially locking in early adopters faster, securing an evolution of past programs against customer churn.
Plus, they have this robust brand built over 165 years of proven nuclear reliability. Earn the U.S. government's trust powering icons like the USS Nautilus. That deep, long-standing trust builds strong customer loyalty and almost unshakable reputation for safety and quality.
And that strong brand allows premium pricing. Clients demonstrably pay a markup for consistent quality, safety records, proven performance in critical applications. It creates an emotional link to national security, clean energy innovation. Very powerful. This brand credibility could propel them to the forefront of the SMR market. Regulatory changes, incentives, they just enhance the perception of this company as the go-to leader, potentially justify strategically evolving past programs by attracting partners who value the brand's assurance in a high-stakes market where trust is everything.
They also control critical resources that are tough to replicate. Classified facilities in Lynchburg, Euclid, specialized uranium processing infrastructure, exclusive patents on advanced fuels like TRISO, plus those long-term Navy contracts competitors just can't access those, a form of cornered resource itself.
And beyond physical assets, their prestige and stability attract and retain top nuclear engineers, beating rivals in talent retention. These unique resources fortify their SMR strategies, giving asymmetric advantages in band development. With regulations favoring domestic production, secure supply chains, these unique assets could drive the advanced reactor revolution. Makes evolving past programs feasible by leveraging patented tech and a talent pool others lack, a significant head start.
Their manufacturing processes, too, refined over decades for precision nuclear work, deliver big cost and quality advantages. For example, their additive manufacturing for TRISO fuel gets higher yields, better safety standards than the norm, sets a new benchmark.
And these methods, honed via Navy programs, are incredibly hard for others to copy. Proprietary know-how, deep experience, the sheer scale needed for this precision. In the SMR context, this process power speeds up innovation. Look at the 2025 TRISO furnace commissioning. It helps with regulatory compliance by consistently meeting tough standards, strategically positions them to lead, could enable evolving past programs into superior, safer designs under streamlined approvals, a crucial time-to-market advantage.
And they develop proprietary tech like the BAN SMR, aiming for that tenfold jump in efficiency and portability over old reactors. Not just marginal improvement. The design uses advanced features like pebble bed cooling for inherent safety, much less waste, addresses key nuclear concerns.
And this tech, backed by TRISO fuel advances, demonstrably outperforms existing options, especially for remote or tough applications where traditional power fails. For that core question about their future, These proprietary advantages in Bayern could effectively replace the need to restart mPower by offering a superior, modern solution. Positions them to lead the SMR revolution, especially as frameworks like the NRC's risk-informed licensing validate these better technologies, gives them a clear, faster path to market dominance.
The timing for this SMR push seems remarkably good now, perfectly aligned with rising global energy demand and urgent decarbonization trends post-2020, a huge contrast to the early 2010s with mPower, when markets just weren't ready or incentivized, leading to the pause.
Exactly.
Yeah.
Seizing the moment now, with climate urgency and the need for clean baseload power, gives them big first-mover advantages with things like Project Pele. It's not just being first, it's setting standards, securing early partners. And crucially, recent regulatory changes, the 2024 Advanced Reactor Rules, the ADVANCE Act, perfect this timing. These legislative and regulatory tailwinds are designed to cut approval times from years to months, slash costs 20–30%, enables them to lead the advanced reactor revolution without the market readiness hurdles mPower faced. It's about being perfectly aligned with the curve now.
And they operate with exceptional speed, crucial in a fast-moving market. Look at the quick commissioning of the Treza furnace in July 2025, concept to operation incredibly fast. They've also optimized supply chains to meet advanced reactor demonstration program deadlines ahead of schedule, leaving competitors behind.
That efficiency comes straight from their integrated operations, allowing quick responses to market shifts like the SMR demand surge. It's not just internal efficiency, it's a competitive deterrent. In the race for advanced reactor leadership, this speed could discourage rivals, supports their leading position, and enables a potentially faster evolution of past programs under quicker regulatory pathways. It's about being nimble, always ahead.
So all these strengths, the Navy monopoly, integration, brand, patents, process power, leadership, they add up to highly sustainable advantages for the long run. Rooted in enduring government contracts, patents lasting over 20 years, expertise that compounds over generations, ensures relevance for perpetual nuclear energy needs.
A naval monopoly and strong brand provide decades-long buffers against market swings and competition, a financial and operational bedrock. For SMRs, sustainability is tied to global trends, decarbonization, energy security. Ongoing regulatory support looks poised to extend these advantages indefinitely if they stay adaptive and innovative. It's built for endurance.
Of course, no advantage is totally immune. Erosion could come from disruptive tech from new entrants like TerraPower, or broader shifts like fusion breakthroughs diminishing fission's role eventually. Policy changes cutting subsidies are always a risk. More competition in commercial SMRs could pressure margins, especially if regulations favor imports.
Right. To counter these threats, they need that unwavering commitment to continuous innovation, always refining designs and processes. But for you, the investor, the significant regulatory tailwinds now supporting advanced nuclear could largely mitigate these risks in the near to medium term, sustaining their SMR leadership. It's dynamic, but they're operating from a position of significant strength.
Okay, let's look at the path forward. Their expansion blueprint. They have a very clear growth strategy. Focus on penetrating SMR markets with BANR, developing microreactors like Pele, continuously enhancing existing lines like advanced fuels.
And that strategy is fueled by reliable government funding and that surging commercial demand for clean energy. Powerful tailwinds. They plan market penetration using strong Navy ties, leveraging that trust to enter new commercial markets like data centers, plus sustained product development, especially in Treso fuel, a multi-pronged approach using existing strengths.
Big opportunities here. Potentially, international SMR exports a huge untapped market. Strategic M&A to consolidate or acquire tech, but risks remain. Regulatory delays slowing deployment. Unexpected technical hurdles in these new designs.
Yet, if the SMR market truly takes off as projected, potential for them to triple revenue over the next decade is real. You can see their trajectory alongside others like NuScale, showing the broader market potential and investor interest. The tide is rising for nuclear.
The total addressable market for nuclear energy, projected over $500 billion globally by 2050. And within that, the SMR segment alone, anticipated $150 billion, growing maybe 15% a year. These are generational numbers.
And given their expertise, proprietary tech, unique position, they're strategically placed to capture a significant 10–20% share of that fast-growing market. Speaks volumes about the opportunity and their capability to execute.
Your tech has broad applications. Defense, commercial power, critical medical uses, not niche, highly scalable, suitable for diverse needs, powering remote sites, integrating into grids, supporting industrial processes.
And they have that resilient North American-focused supply chain. mitigates disruption risk, enhanced by vertical integration, control from start to finish, serves a diverse customer base, 70% stable government contracts, plus commercial utilities, the medical sector, geographically U.S. and Canada operations now, but substantial global potential for commercial products.
Their products are likely needed far into the future, maybe 90% probability, driven by clean energy trends, the need for baseload power, well-positioned to weather economic downturns, protected by those long-term government deals. Broader trends like decarbonization, energy independence further secure their long-term market position. Very resilient.
Key growth drivers: increasing global SMR adoption, easing regulations for advanced nuclear, sustained defense spending on naval propulsion, main risks, intense competition in emerging commercial markets, potential uranium supply chain disruptions, adverse energy policy shifts undermining the nuclear renaissance. Factors for you to definitely watch.
All right, let's shift to the financial story. The numbers backing this up. They show robust financial health, reflecting the nuclear sector's resurgence. Q1 2025 revenue grew 13% year over year to $682 million, driven by both naval and commercial work. Signals strong demand for advanced reactor tech. Full year 2024 revenue hit $2.5 billion. That's a 10% compound annual growth over 5 years, like a steady engine powering through turbulence.
And maintains healthy profit margins. Gross margin 24%, operating margin around 14%, net margin 11%. Shows efficient operations, reflects their scale, manufacturing expertise, strong cost controls from vertical integration turning past lessons into profitable future pivots. Now their combined growth, 13%, and EBITDA margin, 19%, gives 32%. Not quite the rule of 40 benchmark some use for software, but solid financial fitness for expanding in capital-heavy advanced reactors.
And return on invested capital, ROIC, around 10%, shows smart capital allocation generating profits from investments, like that new fuel furnace, their financial fortress. Current ratio of 2.0, twice the current assets to cover short-term liabilities. Manageable debt to equity at 1.1. With $55 million cash, roughly $1.2 billion debt, liquidity strongly supports ongoing advanced reactor investments without undue strain.
Free cash flow, the cash left after running the business and reinvesting, grew a robust 20% to $255 million in 2024. Ample funding for dividends and crucial R&D, fueling future growth. Industry-specific. A backlog over $5 billion, mostly stable naval contracts, gives strong revenue visibility for years. Plus, those advanced reactor demonstration program awards for fuel highlight government confidence and progress in advanced reactors.
Compared to peers, they consistently outperform industry averages. Revenue growth beats the 8% average. ROIC of 10% tops peers like Huntington Ingalls at 8%.
Strengths are that near monopoly in defense, deep manufacturing expertise. A comparative weakness. Maybe less commercial diversity versus competitors like GE Hitachi with longer, pure commercial history. But overall trends show clear upward momentum. Revenue, EBITDA growing over 10% annually. Expanding free cash flow. Points to a future driven by advanced reactor opportunities. They're gaining steam.
Macroeconomically, rising interest rates can raise borrowing costs for big reactor projects, but their low debt burden, DE around 1.1, provides a cushion compared to more leveraged players.
Global trade matters too. Facilitates uranium imports, essential for operations. Tariffs or geopolitics could disrupt, but their strong domestic focus and vertical integration mitigate that reliance. Inflation can squeeze margins on fixed-price deals, but established pricing power often helps offset that over time. Big tailwinds. Subsidies from the Inflation Reduction Act. Energy price volatility favors stable, baseload nuclear, reinforcing their position.
Okay, let's feel the market pulse. Recent events, current sentiment. Several key things reinforcing their path. July 2025, secured that huge $2.6 billion naval contract, boosts backlog visibility. Same time, core manufacturing for Project Pele started July 24th. Crucial, tangible step for mobile microreactors. And those June 2025 leadership changes solidified the advanced reactor focus.
Right, so for you, the individual investor, keep a close eye on the upcoming Q2 earnings report, August 4th. Updates on advanced reactor progress, BANR, Pele are highly anticipated, could move the stock. Also watch NRC decisions on advanced reactor licensing, especially Part 53. Potential to significantly accelerate their strategy by streamlining approvals. Regulatory shifts are a major catalyst here.
Looking at investor chatter, say on social media, sentiment is predominantly positive. Maybe 70% express excitement about the nuclear revival, this company's potential in advanced reactors. See it as a key beneficiary.
But around 20% are neutral to negative. Concerns focus on the high valuation already, potential regulatory delays slowing things down. Key priorities for investors, institutional and individual. Growth in commercial SMRs, stable dividend signaling health. You see examples online. Some praise Pele as a game changer, validating the tech. Others urge caution, saying it might be overhyped like its previous nuclear program, meaning mPower. The dominant narrative portrays them as a potentially undervalued play on the energy transition if they execute on commercial SMRs.
Now, the crucial part for you, determining value. Is this opportunity right for you now? Market close July 24, 2025. Stock at $143.84. Modest uptick. Broader nuclear sector optimism, likely helped by things like the TRISO furnace news.
That price puts market cap around $13.14 billion, a mid-cap player uniquely in both defense and energy. Trading volume shows consistent investor interest, tied closely to that advanced reactor potential, the nuclear renaissance story. But that current price reflects a premium. It prices in aspirations for leadership, significant future growth, which also means vulnerability if regulatory tailwinds don't fully materialize, or commercial adoption is slower than hoped. The market's giving them credit for future success already.
And when valuing, the margin of safety concept is absolutely vital. Buying stocks at a significant discount to intrinsic value acts as a buffer against errors, downturns, like buying something you think is worth $1 for 70 cents.
For individual investors here, it's crucial given the uncertainties still around SMR adoption, even with tailwinds. A strong margin of safety might mean waiting for a price below, say, $120 if your analysis suggests intrinsic value is closer to $150. Help safeguard against delays, regulatory hiccups that could hit returns if you buy at the peak price. Protect your capital first.
Valuation is really your compass. Shows if a stock is a hidden gem, undervalued amid nuclear hype, or an overpriced bet on unproven dominance.
Understanding valuation forms by sell timing, risk assessment, portfolio allocation, especially in capital-heavy industries like this. Mispricing overlooking regulatory boosts maybe can lead to big gains or losses. Valuation helps avoid emotional trades, focus on fundamentals like those robust contracts, unique advantages that could propel them. Be rational, not reactive.
So how do we value this company? You need a blend of methods. Discounted cash flow, DCF models. They project future cash flows from Navy deals, expected advanced reactor growth, discount them back at maybe 8-10% cost of capital, yields intrinsic value estimates, say $130 to $160 per share, assuming maybe 10% annual growth tied to easier regulations.
Well, then relative valuation compares multiples to peers. Trailing PE is 45.81, way higher than the 25-30x for defense peers.
Okay.
Forward PE 44.64x, EV/EBITDA 29.80x. These high multiples clearly show a premium is being paid, arguably justified by the monopoly traits, unique position, growth potential. Other methods, sum of the parts analysis, maybe value government ops at 20x EBITDA, commercial SMRs at higher growth multiples. Combining DCF and relative valuation gives the best view. Analyst models currently show 14-30% upside from here, suggesting a favorable outlook.
Okay, let's frame the investment case. Bear versus bull, the skeptic's view, the bear thesis. Institutionally, trades at a lofty 45x PE. Little room for error in a capital-intensive sector prone to delays. Concern that SMR hype fizzles if costs overshoot, or competitors like TerraPower grab share faster. Regulations might help, but certification delays could stall growth, lead to earnings misses, maybe 20-30% downside.
And individual investors sometimes echo that caution online. See it as less flashy than pure-play SMR startups. Fear it's overvalued if Navy contracts don't translate to big commercial wins. Hype radiation without substance could hinder evolving past programs, impede leadership if economic pressures squeeze margins more than expected. Bears say, don't pay a premium for an unrealized future.
Now, the optimist's vision, the bull thesis, institutional analysts rate it outperform. See 14-30% upside from unlocked commercial leverage plus that stable government backlog. Project impressive EPS growth, 30.7% by 2028, fueling valuation expansion in a nuclear renaissance.
Individual investors online often praise the real nuclear sauce, those lucrative, steady contracts, proven edge over hyped rivals, lacking their history or defense ties. See it positioned for dominance as regulations streamline SMR pathways. This view strongly supports evolving past programs, leading the revolution via cutting-edge tech like advanced fuels. Considering everything tailwinds, regulations, unique position, the bull thesis looks like the most probable outcome for you. Broader trends, favorable regulations likely outweigh valuation concerns. Strong Q1 results signal positive momentum supporting this.
So bottom line, is it trading at a discount right now? Based on that probable bull case, current price around $144, it looks like it trades at a slight premium. Compared to intrinsic value estimates, $130, $160 from DCF, and average analyst targets around $141.
Which suggests it's not a clear, obvious bargain offering a huge margin of safety today. For investors wanting a bigger buffer against SMR uncertainties, patience for dips below $130 might be wise. However, the strong regulatory support, the potential to establish clear leadership in a booming market, could justify the current valuation for long-term believers in the nuclear story. Compelling, but maybe not a steal right now.
So let's revisit our big question. Is this company poised to dust off that old program, surge ahead as the SMR leader, and capitalize on regulatory shifts?
Well, restarting the original mPower program outright, highly unlikely. That was shelved in 2017, significant costs, market wasn't ready, partners left, the timing was off. Instead, they are brilliantly positioned to lead the advanced reactor revolution through evolved, innovative designs. BANR, Project Pele. These new designs directly use the modularity lessons from mPower, but enhance scalability and safety, much more viable for today.
And crucially, recent regulatory changes, NRC's Part 53 finalized in 2024, streamline licensing under the Advance Act directly support this strategic shift. They're designed to slash approval times, cut costs 20–30%, enable faster commercialization. You see it happening with the July 2025 commissioning of the Trezo fuel furnace under ARDP funding, puts them right at the forefront of deployable nuclear tech. This comes from their smart pivot to defense-integrated advanced reactors, where Navy expertise gives a unique, powerful edge. They're turning regulatory tailwinds into market leadership without needing an outdated blueprint.
Now think about this from first principles. Nuclear fission's energy density, 1 kilo of uranium equals 2.5 million kilos of coal, is just unmatched. Makes their technology essential for reliable baseload power as the world decarbonizes. That's an asymmetric advantage for you, the investor, as grids strain under intermittent renewables. And importantly, that near monopoly in naval reactors provides consistent, non-dilutive funding for advanced reactor R&D, a financial bedrock peers just don't have.
But you have to acknowledge the known unknowns. Potential uranium supply disruptions from geopolitics could hike fuel costs 10–20%. And the unknown unknowns, low probability, but possible breakthroughs in fusion or other renewables that could change the energy landscape, may be making SMRs obsolete eventually, though timelines suggest that's a 10–20-year concern minimum.
So for you, the individual investor wanting an edge, diligently watch the progress of DoD microreactor deployments like Project Pele. Early successes, validation there could signal maybe 2 or 3 times revenue multipliers in the commercial sector down the line, could let this company outperform benchmarks by using regulatory fast tracks before competitors catch up. A powerful early indicator.
So just consider this. What does it really mean for one company to hold such unique keys to the future of global power? How might this intertwining of energy independence and national security, driven by these very advancements, reshape not just energy markets, but international relations and tech innovation for decades? Something to think about.
Love this? Drop a like, subscribe, and ring the bell so you never miss a podcast.